Welcome back to another episode of the Stoic Trading Psychology Podcast. Everybody, hope everybody is doing well. Today, we are going to discuss how to stay calm during war market volatility and really just market volatility in general. Everybody knows what's going on this past month in the Middle East. Obviously, the whole war with Iran and Israel and the U.S. and all that good stuff here. We have seen the markets go a little bit crazy. I will admit, I thought that the S&P and gold would be a little bit more crazy. They really aren't. I mean, oil did surge above $100 a barrel from I think it was like $68 a barrel was the bottom or something like that. And it actually reached $114 at one point. And that is really the highest since the pandemic in 2020. So it's been pretty crazy as far as oil goes. As far as gold goes, we haven't really seen too much. I mean, we did see a spike up and then followed by a significant spike down, which is what I want to talk about here today. Obviously, we're going to be talking about a decent amount of stuff, but everybody needs to understand the term priced in. This war between Iran and Israel, however long it lasts, whatever, people saw it coming. I mean, I remember telling my friends months ago that it's coming. I had friends telling me months ago that it was coming. That's where I got the information from. So people definitely predicted that this was going to take place. Not going to get into politics here, but when Trump takes money from certain people, usually that means he'll be doing something for them. And I think that this is what he's doing. So, but without getting too much into politics, you were able to see this coming. Obviously, predicting the exact weekend that it started is very difficult. I'm sure some of the insiders knew that, but they've been pricing this in gold, right? So that's why we've seen gold. I mean, the bottom of gold, I'm going to pull it up on my computer right now. I know that this is an audio podcast, but the bottom of gold was at about $4,400 an ounce US. And ever since then, that was back in the start of the year or beginning of February. And then before we saw that massive drop, it got up to $5,413 an ounce. So when the war kind of started on the weekend here, or the bombing started to happen on the weekends here, we did see gold surge a little bit, but then it tanked. And you want to know why it tanked? Because it's too easy of a trade. It's really that simple. Think about that. There's a war. I should buy gold. Wow. Then you should have taken a loan out, credit card debt out, whatever you can, and buy gold because right? There's a conflict going on. Gold's going to go up, but it's not that simple. It's just too much of an obvious trade. And usually when that takes place, that is when we see gold tank. So from the high where gold was last when this conflict started, we have seen almost an 8% drop in gold. The time of recording here, it has actually recovered a little bit on March 10th. So it has recovered a little bit, but it's just a good, valuable lesson on the concept of being priced in. If you don't know what priced in is, you have to get familiar with that. The big players are pricing in these conflicts before they take place. They're pricing in the price of gold for that conflict to take place. It's really that simple. So when you come in and you buy, because there's a war, you're going to get smoked, especially if you don't have a stop loss. If you wanted to invest in gold without a stop loss, okay, reasonable enough. I still believe in waiting for a decent pullback, like what we have seen after the event. But you could almost, it does sound kind of obvious too, but you could almost predict this easily where it's like, oh, everybody's in a rush to buy gold. And all the big players are going to sell to these novice traders buying because they think gold is just an obvious buy. And I've had people since February say, hey, Kevin, I'm taking some trades. I'm not doing too bad with supply and demand. Some winners, some losers. But I'm thinking about just buying gold because it's just been going up and I'd just rather just make money on buying gold. And it's like, if you just think about that logically, that doesn't make any sense because then why would you ever take any other trade? You can just buy gold, right? It's going to go up. So that's another reason I was kind of started to become bearish here on gold because Everybody was getting super, super confident in buying gold. And that's the reality, is when people get hyper confident, usually you see markets crash. And when people get super scared, that's when you see markets start to go up, right? Everybody's panic selling, panic selling. I did recently watch like an hour-long little mini documentary on the Great Depression in 1929. And I was familiar with the Great Depression before, but I don't know, I just wanted to learn about it. And it's just funny, it's not funny, but the hysteria that everybody had. Everybody was like, you were a complete fool if you weren't buying stocks. And I just think that that's funny, because we were kind of seeing the same thing with Bitcoin, and then people got reality check there. And now I think we're seeing that on gold. I am very bullish on gold. But honestly, I'm looking at a chart of gold right now, and I could see us getting a pullback of over 30% on gold to below $3,500 an ounce again. That's where I think we could be headed. And the reality is, people won't think that that is possible because, oh, there's a conflict in Iran, they're printing money. Well, markets don't work like that. They really don't. So dealing with trading during these markets, like I am kind of going off on a tangent here on gold, but everybody just thinks during these times you just buy gold or whatever and you're good to go. And it's just simply not the case. Same thing with oil. Since the whole conflict pretty much started, we have seen oil go up over 50%. And then now, since that high, we have seen oil crash over 30%. Right? So I don't know if anybody's familiar with my channel or how you guys find these podcasts. If you aren't from my YouTube channel, I have a YouTube channel at FX Telepath. I forecast the markets every single Saturday. So make sure you guys check that out, as you can follow along with my analysis. And last Friday, the date was March 6th. So I released the forecast on March 7th. My forecast for oil was don't trade it. It was the first time in the 5-6 years I've been forecasting here on YouTube where I said my analysis for oil is to simply not trade it. It's really that simple. And I was kind of implying the same thing on gold. On gold, we had a couple decent zones, but it's just too crazy right now to trade gold and oil. So that was my forecast for oil, was just to simply not trade it. It's not worth it. Sure, yeah, you could have bought and you could have got in on a over 50% move, but those are so rare. And the problem is these novice traders, they don't think that stop losses are important. So me personally, I could trade oil because I'll have a stop loss in place and I won't completely blow my account, where beginner traders will most likely blow their account. I had somebody message me the other day. I'm not going to name names. This person's a very nice person, but they were talking about how they grew their account from $50 to like $500 or something like that in like 8 days or something like that. And I'm like, okay, whoa, you are taking excessive risk. And they thought that it wasn't excessive risk because it wasn't really a lot of money, right? Like $50 and $500 to some people is not that much money, but you have to think about it as a percentage of your account. So I'm like, obviously this person is risking half their account or a third of their entire account. They're not risking 1% a trade to be trading to make that return. So, that's the problem with beginner traders. They don't really understand these things. So if you are a beginner trader and you are seeing these markets like this in gold and oil, it's okay to not trade. Okay, who knows? I've seen people say that this conflict is going to go on for years. It's another Iraq. Who knows? Really, like, it's very difficult to predict. I think it's possible, but obviously, let's just, for the sake of our argument, let's just say that this Israel-Iran thing and U.S. thing goes on for. I'm trying to be careful with my words here because I don't want to get banned on YouTube. I don't know how strict they are, but let's just say it goes on for 10 years. This market volatility is not going to be like this forever. Obviously, things will, let's just say it goes on for 10 years, things are going to calm down and we'll go back to normal market conditions. Obviously, yes, some weekends or sometimes there will be spikes because whatever, I'm not going to get into details and be hypothetical here, but obviously over the course of the 10 years, let's just pretend, there will be times of crazy market volatility, but things will go back to normal as well. So it's really not a big deal to not trade. and not take any trading setups. Me personally, I have seen a couple setups in some of the Forex pairs. I am personally avoiding gold, and I am personally avoiding oil right now. I'm just really, I mean, I have seen a couple setups in oil. I actually had one of my nice 1 hour zones work beautifully, but I'm not in the trade. And one thing you have to get through your head as a beginner trader, and if you want to become a stoic trader, is not being in a position is a position. It's called having cash. That is a position. And you have to get that through your head. You don't always have to be in a trade. And I know that's difficult for some people who, they day trade. They're expecting to get a couple setups a day. And that's why I always recommend swing trading for beginner traders, because it just helps you practice patience, which is a huge part of trading. I personally will never day trade. I don't want to be at my computer all day. I'd rather just place trades and answer messages in the group, and just not have to be tied to a computer. I want to go golfing. I want to play hockey. I want to live my life. So I like to swing trade. I will personally never day trade. If I did day trade, I'll be honest with you, I would expect to get at least one setup a day, 5 setups a week. That's what I would expect. So it is difficult for people to say, hey, I'm not going to be trading right now. And that's why it's good to trade multiple pairs, multiple instruments as well, because one market could be going crazy. You don't want to trade it, and you might want to go trade something else. So you have to get through your head that you don't have to be taking trades. You have to understand that saying, I'm not going to trade oil until these market conditions calm down, that's a professional level move right there. And it's really not that difficult to do that. You just don't trade it. And then you might get caught up in the hype where you see oil going up 53%, and then it's completely crashed back down to pretty much where it started to begin to rise. And you might think, oh, I got to hop on this now. And you don't. That's the truth. You don't have to hop on it now. And I wouldn't. It's really that simple. Very, very sketchy to be trading a market that goes up 50% in like 2 days and then down 30% in 2 days. How are you going to trade that? It's as easy as it is to get in on the move to the upside. It's almost easier to get screwed by getting screwed to the downside as well. It is very, very easy to be doing that. So even the S&P dropped it a little bit, and it's funny. There was a good zone on the S&P 500. I'm looking at it right now on the 4-hour chart. Some of the people who've been watching my forecasts have been you could tell that I've been pointing out the zone for a while. And we gapped down into the zone and then broke that 4-hour area of demand. You can go watch my forecast on YouTube and you'll see the exact zone that I'm referring to. And we broke through the zone by a little bit. It wasn't like a massive break. If you had a wider stop loss on this one, then you actually would have been pretty fine. But that's another thing. That's a bummer, right? I've been waiting for the zone for a while. It was a good zone. And then this whole conflict completely screwed me on that zone. But just so you guys understand, that's going to happen as well. You're going to be waiting for zone forever, and then this market conditions take place, and you'll just take a loss, and that's all part of the game. And you know what I didn't do? I didn't blame Trump. I didn't blame Israel. I didn't blame Iran. I didn't blame anybody except for myself, because I should have had a wider stop loss on the zone. If I did have a wider stop loss, then I would have felt more comfortable. If I had a wider stop loss, then I would still be in this trade for less of a risk reward, because you have a wider stop, your risk reward is going to be worse, but I would still be in that trade. And this is just a little insight. I've been telling the members and everybody, in these market conditions, wider stops are going to be your best friend. And I did somewhat of a wide stop, so it's not like I didn't follow my rules there. I did somewhat of a wide stop, but I honestly should have paid more attention and did a wider stop than that. And that's the reality. You can't, I made a mistake and I'm owning up to it. And I'm basically telling you guys about it to help you guys learn from my mistake. Wider stops in these market conditions is one way to deal with these types of trading conditions. Wider stop losses. Be less aggressive with more aggressive with trade management. Meaning, if you get a trade and it's counter trend and you know that, there's a conflict going on right now and your trade's at 2-1, maybe take 80% of the trade off and put your stop to break even. There's nothing wrong with locking in profit. Like in normal market conditions, if you're trading with the higher time frame trend, everything's looking great. You don't want to close your trade at 1 to 1, 2 to 1. You want to let that ride. But in market conditions like this, it's okay to take profit. It really is. I'm not saying, buy a zone and at like 0.1 to 1, take your profit, because profit's profit. I think that's not a good idea. But anything over a 1 to 1 in these conditions is pretty decent. Obviously, yeah, I think 2 to 1's like that good middle ground. But if you're trading very volatile markets and you know that maybe Trump's about to speak on the war or whatever, then it's good to lock in profit. There's nothing wrong with that. But again, trading is so, like, there's good rules and good things to have in trading, like good concepts to have, but you also have to understand that those concepts can change based off of market conditions. You have to understand that. So that's kind of the nuance in trading. And when I will admit, when I first started trading, I thought it was just like, oh, well, you'll have a set of rules and that's what you'll do. Like, for example, before the last couple of years, that's what I meant to say. Yeah, trading pretty much only with the trend, looking for the higher odds situations. And I did well, but I started to notice that I'm leaving money on the table with these counter trend trades. And all you have to do is just be more aggressive with trade management, trading counter trend. If you don't know what I'm talking about, check out my course I just released on YouTube, Set and Forget Trading Full Course. I break down exactly what I'm talking about, because I was leaving money on the table because I thought that, well, trading with the trend is the higher odds situation, so you should only be doing that. And I was wrong. There's money to be made trading counter trend. You just have to be mature enough and responsible enough and professional enough to understand you can trade those lower odds situations. That are counter trend or you're at an opposing zone. You just can't be greedy. And that is another way to deal with market conditions, because market conditions typically mean like this war that's going on. But also if the S&P 500 is really trending down and you're looking for buys, it's kind of aggressive. So you have to understand those market conditions and deal with them accordingly. So some ways to deal with that, like I said, risk less, right? If let's say you normally risk 1%, there's nothing wrong with risking 0.5%, understanding like, hey, I could get spiked out of here because Trump could come on the radio or on the TV or whatever. What is this, 1940 on the radio? Trump could come on the TV and, he could say, oh, we're going to escalate this war even further or whatever. I'm just making stuff up. And then you could see a massive spike and you could be stopped out, where if it was normal market conditions, you wouldn't have been stopped out. So risking less is always an option, especially if you're new. There's nothing wrong with risking less, and that's the problem. It all ties in together with previous podcast episodes of everybody thinks they're going to get rich quick. Everybody wants to turn $30 into 30 grand because they saw this stupid YouTuber guru talking about how he made 20 grand a day trading, or turned $50 into 50 grand in 3 months trading. And all that stuff is completely bogus BS. And those people belong in jail. You guys know me. I'm very outspoken on that. I don't really mention names because these people, I don't know, I feel like they have some sort of backing. I'm not going to get into it, but I think there's a reason they're not going to jail. And in reality, that's kind of where they belong. They're making these promises. I had somebody message me the other day, hey, I would like to join your group. I'm like, okay, no problem, join the group. And they're like, what is the average return that the members are making? And it's like, that's not what my whole Discord group is about. We're about learning. And the whole idea, like, what am I going to say? Like, oh, the average, if you join my group, you'll make 3% a month. Like, what a stupid, and I'm not calling this person stupid, but it's just like, everybody's so brainwashed and just, they have delusional concepts of what trading is. And they have to understand that if you are tying or beating the S&P 500 average return, which is like 8% a year, 8 to 10% a year, you are doing fantastic at trading. And then I got a comment, because I mentioned that in one of my videos. I got a comment from a gentleman saying, why is it even worth it then? Well, because you could, let's say you invest in the S&P 500, you make 8% a year, 10%. Let's just say 10%. Let's just say you invest your money long-term in the S&P 500, you make 10% a year. Well, if you're trading and you make 10% a year as well, you now have a 20% return. So it is worth it. But everybody thinks you got to turn $50 into $50,000. And I've talked about it here before. Anybody who's ever taken a trade, think about how hard it would be to turn $50 into $500. And the problem is they think that it's just a small amount of money. So they think, oh, well, it's really doable. But think about that. $50 into $500. That's consistently making a 100% return. It's incredible. So part of the problem is everybody wants to make money quick. That is the issue. And I don't blame them because they are being psychologically manipulated here on YouTube by these fake gurus who are promoting these returns to sell their overpriced, probably $1,000, $2,000 course. And, I'm sure you could learn stuff in their courses. That's fine. But you are overpaying. It is insane. And the reason they are charging that much is because they have basically gamified their whole course thing. And the reason I know this is because I've had people message me who are promoters of these people or whatever, and they've talked to me about how you need to sell your course for more because people are only going to join because this is a high, I think it's churn rate. Is that the right word? Like, this is like a high, like, oh, I'll join the course, I'll try to trade, and then they give up after like a month. There's a high probability of that to take place, so you want to charge them more. And that is like the marketing tactic there. And I've refused to do that. I've refused to take their advice. I do have a lifetime membership, which is more money, but it's because, my God, I do a daily breakdown video every day that's like 10 minutes. I do an hour and a half long Sunday Zoom session where I'm taking questions, doing homework, and I do a live stream on Sunday as well. I'm always in the Discord. I answer every single message. So, to pay the lifetime membership, it's really worth it. And this is not to hype up my course or anything or my Discord, but I'm just saying I do charge more for the lifetime access, and it's literally less than some people charge like a month or whatever. So, anyways, yeah, everybody's just, they want to get rich quick, and then they see this market chaos and they think, I got to capitalize to the upside on this, and what is my best trade? And then they see oil going up 10% and they're like, it's going to go up more, and they ride the hype, and then next thing they know, and they don't have a stop loss because they're new, next thing you know, oil's tanking and they've blown their entire account. Blowing your account should never happen. It shouldn't, like, I have never come even close to blowing my account ever, like not even remotely close ever. Like, and the reason is because when I first started trading, I always understood from the beginning, you don't risk more than 1% of your trading account. I've always understood that. And I've mentioned it here before on the podcast, but obviously it's a podcast, so I'll have to repeat some of the same stuff. But one of the people I was learning from, they mentioned it, how, not only do you want a stop loss because it prevents you from losing more than you want, but also it makes it so you don't have any capital tied up. So you could be in a trade and then, it could tank. And then now you have capital tied up in that trade because you're waiting. Let's say you don't sell, you're going to wait for it to recover. Well, let's just say it does recover. Let's just say best case scenario, it does recover, but it takes 2 months to recover. You're not taking any trades in that 2 months because all your capital is tied up in that one trade now, and you're just waiting for it to recover. That's best case scenario. Worst case scenario is it keeps falling and falling and falling, and finally you just want to stop the bleeding. And let's say you have a $5,000 account, you want to stop the bleeding at $1,000, and now you're down $4,000, right? Because you just want to finally stop the bleeding, and then what most likely will happen when you sell? It's going to start to go up. It's just funny how it works like that. And trading will test you guys, trust me. Trading reminds me of poker so much, where like you're taking it. You talked about this before as well, where you start to trade, you overtrade, you take too many trades, and you lose. So you're like, okay, I'm gonna be patient. I'm not gonna take that many trades. And then maybe you see a setup, you're like, I feel like I'm rushing this one. I'm gonna wait. And then that trade works out beautifully. So now you're like, okay, well, I can't hesitate. I have to take the trade. And then you take the next trade that's actually a mediocre trade, and it loses. And then it's very it tests you psychologically. It reminds me about playing poker, where like I have been on a bad streak in poker. I've definitely been playing less the last couple of years, but I've been on a pretty bad streak. And it's just fun. Like I was playing against my buddy the other day, just heads up, me versus him, just for fun, nothing crazy. And it's like I couldn't hit anything. I couldn't get any cards. I couldn't hit anything when I did get cards, or if I did get king queen suited or something pre-flop, I'd raise, he'd fold, so I didn't even get to see the flop. And then finally, when I won, I hit some. I don't know how much people know about poker, but I hit some weird gut shot straight draw with like queen eight suit with queen eight, and I'm like, finally, I got him. He went all in on the river. I'm like, let's go. Finally got him some weird gut shot straight where it's like a very uncommon hand I could have. I call his all in. He shows his hand. I'm thinking I win. It was a chop. He had the exact same hand, and like it's just so rare, and it just like was so triggering where it's like, oh my god, even when I do win, I tie, right? And just reminding me of trading where it's like you take a trade, you should have moved your stop to break even, and you didn't, and then price came back down and stopped you out for a loss. So next time you're like, I'm gonna put my stop at break even. So next trade comes, you take the trade, price goes in your direction 2-1, you put your stop at break even looking for a 3-1, price comes down, just touches your break even, shoots up for your take profit. That will happen, I promise you, 100%. And that is the frustrating part about trading that everybody has to deal with. And if you can't handle that, it's really not for you. So you have to be able to handle these triggering moments. You have to be able to handle trading in these market conditions and understanding that you're going to take losses during these conditions because that's how the market's going right now. But again, you can do things to mitigate the damage here. So like not trading oil right now is a good idea because it's so volatile. One bomb here, one quote here from Iran, the Iranian leader, the Benjamin Netanyahu or Trump, and oil spikes up or oil drops. And then zones, we trade supply and demand zones in my group. They just blast right through as if they're not even there. And that's the reality. So one way to do that, one way to deal with these market conditions, don't trade certain markets that you know are going crazy. So for example, like I'm looking at the euro and these forex pairs, and they're acting pretty decent. Like there's nothing really showing me like, wow, we shouldn't be trading this. But then you look at oil and you're just like, okay, whoa, I don't really want to be trading oil right now. Look at the crazy moves. And then gold doesn't look that bad. But the problem with gold is, you see a nice supply zone short, and then one bomb later or one quote later, and then gold just absolutely tanks or absolutely goes up. It's very difficult to be trading gold during these times. So I'd be trading the markets that are less crazy. That is one option. Another option, risk less money. I've already talked about that here. Just risk less. Number 3, just don't trade at all. Let the initial couple weeks of the conflict play out. Take a break. Spend time with the family, the kids, whatever you got to do. And then you can begin to trade later. That is obviously another option. And obviously, you should just be trying your best to understand that, even a professional trader in these market conditions, it is very difficult to trade. You have to just understand that. You have to be understanding. You have to understand you're not going to hop on these crazy moves. You're not, just because the markets are volatile, doesn't mean that you're going to try to make a 30% trade. Okay? It's stupid. And then what's funny about these times too? It's your favorite online trading guru always just happens to be on the positive side of that move. Isn't that funny? And then just on another note, another rant. The big thing now that I see all these people doing is like, I am showing, they show their 50 grand winners every day, and then the one day they lose 5 grand. So they're showing their transparency. That's just like a funny concept to me. They're showing their transparency by always showing their $50,000 wins, and then the one day they show their $5,000 boo-boo loss, and so. These are the ways we can deal with these market conditions. Don't feel bad if you've taken a couple losses during this whole conflict and everything. Don't feel bad about it. Just deal with it properly. Be stoic about it. Understand, and don't blame anybody but yourself. Obviously, if there's a good zone and let's just say you're not trading oil, you're not trading gold, you're taking my advice, You're just trading a regular old Forex pair, and then you take the trade, and then price spikes up above your zone and stops you out. Don't put the blame on any other people. And ask yourself, am I blaming? So never blame anybody else. But ask yourself, was this on me? Should I have taken this trade because Trump was speaking later? Ask yourself that. And then at that point, don't put the blame on anybody. Like if you're trading oil short and you get completely screwed, that's your own fault. I've given you the advice, don't trade it. That's your own fault. Understand when it's your own fault. Understand when it's like, okay, these market conditions are crazy. That's why I lost. Not really my fault, but I'm not blaming anybody else either. At this point, I just, think about just maybe taking a break. Be stoic about it. Don't blame anybody else. Be stoic about it. Do the proper things. Be stoic. That is what this whole podcast is about. I hope you guys enjoyed this podcast. If you have not followed me or subscribed to me on Instagram, on YouTube at FX Telepath, I also have Instagram as well. Make sure you guys do so. Follow along with my forecast every single week, every single Saturday. That's the beautiful thing about my channel is I put my forecast out there. I put my analysis out there for the world to see. And it's probably one of the least popular Forex forecasts, which is funny. But I put it out there for people to see, for people to judge themselves. You can go back and watch the past 6 years of me calling out these markets. And that's the beautiful thing about my channel. It's not hindsight. I'm not just posting PNL. I'm not talking about $5 and a 50 grand or become a professional trader in 3 months or fundamental analysis BS like that, which I'll be doing a podcast on why fundamental analysis is completely unrelated. So make sure you guys stay tuned to that. Follow me on YouTube, subscribe to me on YouTube, follow me on Instagram. Obviously, I have the membership as well, but I don't recommend joining my membership until you have watched. Follow along with me for my forecast for a couple weeks or a month first, so you can actually see the accuracy of these trades being called out beforehand. So become a stoic person. I have a great episode on that. Become a stoic person. Become a stoic trader. Okay, there are things you can do to mitigate the damage you can receive in these market conditions, and that is on you. It's not on anybody else. It is completely and entirely on you. So I hope you guys enjoyed this podcast. I will see you in the next one.